Welcome to Total Money Management. We're back and we're talking about the signals and noise, weekending 24th of October. Stephen and Thomas, you're on the other side today, so it's 2v1.
I know, I don't like it over here.
That's the master's
Now
chair.
I know how you feel.
The master switch. Mate, you're blocking my view. Look there, jeez.
Look at the size of
We've
it.
got to go back to the old
I'm
way.
vast.
Got to go back to the old way.
Tom's got
I've
a
been
tan
eating.
today. Tom's
Hey?
tanned today.
Tom's tanned.
What have you been doing?
Tom's a bit sunburned.
What have you been doing on a weekday, Tom?
Working.
Working at the back nine.
Yeah.
Now, speaking of which, how did we go last weekend?
Doing what?
Oh, you've forgotten already.
What did we do last week?
Yes.
The Mayor's Ball.
Oh, I was at the Mayor's Ball.
Oh yeah, where I just spent $2,500 bucks. Oh yeah, that ball.
We
Did you win it? We won it, didn't
we
we?
won it. Yeah. So
Thanks, Daddy Steve.
we
Just just letting people know that we're obviously rolling in it here at Total Money Management. Since Jacob goes to the Lord Mayor's Ball in Brisbane and starts bidding on a what is it?
It's a
3-day Tasmanian holiday for two, right? So flick the old man, right? I'll take Tom. Steve can sit at home, right,
Yeah.
doing his knitting,
Yeah.
while we're in Tassie drinking all the good wine,
I was
playing golf.
Well, I was going to invite you as the third.
No, let's don't. Let's not.
But given your back's blowing
Jesus.
out, I thought you might just want to drive the cart. Or something.
Unbelievable.
We need to keep him healthy.
Did you get a leave pass? You must have got a leave pass.
I kind of. Well, she was.
So you haven't even asked
She
yet?
was sat next to me. So I was like, I'll bid on this, but we're probably not going to win, so it's all good.
I'd hate to go golfing in Tasmania, like
So,
top-rated
when
courses.
have you got to use it by a certain time? Or?
There's 12 months, so we'll book it in and
Right.
schedule it whenever.
Okay. When
Probably
when
sometime.
you and Tom are,
When Tom and I are ready.
ready to go.
Well, it was either that or Vegas, so
Right. Okay.
or both.
yeah, or maybe both.
I know you can get carried away at those things.
Where Vegas?
But like what'd you get? 2.5. Is it is it cattle class or business class?
No, we got to sort the flights out.
So it'll be business class.
So it'll be.
But hang on, like what do you
No,
mean?
private jet.
You got to fly.
Jacob's got
it's-
jets.
But what you mean? It's extra.
Yeah.
What's the $2.5 get you?
Charity.
Bloody charity.
An excuse.
But what does it get you?
It's an
No,
excuse
it's-
to go to holiday
It's
on a holiday.
three nights. It's in like a nice accommodation and 2 18 holes at
Of
like
golf.
these famous golf
Right,
courses.
but you got to pay for your own
But we
flights.
got to get there. Yeah.
Oh, jeez.
I've always wanted to go to Tassie, never been.
I'm glad you never bloody told me last Saturday night when you were texting us.
Mate, I was a bottle of wine in and thought,
Yeah, well.
here we go.
You do get carried away at those things. I understand.
Can we stay on track?
Yeah, well,
You too?
yeah. Where are we, Tom?
We're a travel podcast.
I'm still on the golf course.
Last week
Oh,
we were
God.
property, now we're
Righto.
travel.
Righto, let's get on with it. What have we got?
Well, all I know is this is very important.
Actually, no, before that, we've got a Facebook community. Can you go and join it? There's only about 51 members and I'm feeling a little bit sad.
It's
Oh, God, it's like the blog.
I know, but at least here they can talk to us
That's what?
on the Facebook.
Well, yeah, but they could write in and go, oh, Steve wrote a really good blog
Yeah.
and, I've got a question.
It is a good blog.
But no one ever writes in and goes,
It's a great
Steve's got a really great blog. Anyway, look, let's get on with it. Look, the main point, couple of big things. The one thing that's concerned me recently, particularly, is the state of the American economy, and it looks like it's going to go into a recession. Now, the last 6 months I've been like, nah, it's all good. There's a strong spending. But the spending now is coming down under Trump, and that's what they want to do because they're ideologically opposed to government spending, right? The point being, the spending's becoming less, which means there's less money going into the economy. The tariffs are raising roughly, annualised about $300 billion. So that's about 1% of GDP. So that's taking money out of the economy, right? Because it acts like a tax, okay? So when you have that happening, what you've got to do, if I don't spend $100, one of you guys have got to spend an extra 100 to make up for mine, right? So what's happening is, in that case, and the reason why I've put the chart on the left-hand side, banks help fuel private credit growth, is because you have to keep continuing to add debt
Yeah.
so the economy stays afloat. And the thing that concerns me on that front is and I've mentioned this over the last month, there's a lot of trouble in the financial markets, not the stock market, but with private credit, and a lot of that growth has been astronomical. And the reason why I suspect is because after the GFC, they put these new rules on the banks, right, to try and make them a little more stable, right? So they sort of went, okay, well, listen, you can't do this and you can't do that. So what's happened, of course, is the banks have got around it by doing what do they call them? Special investment vehicles, right? So they do all these things off balance sheet. And one of the things they're doing is they're giving a lot of money to private credit companies who are then going out and saying, all right, we'll buy the assets and try and get investors a return.
In private equity land, that's called normalising it.
Yes, yeah.
It's basically a free ticket.
Yeah, well, that's what I'm concerned about.
So are we finally seeing the US economy start to show some cracks, or?
My argument is yes, and that's why I'm sort of saying 2026 may be very, very interesting, because and again, the important thing is when you've been through these market cycles, what you've got to remember is they stop, right? You cannot continue on with the levels of debt growth that are going on, right? And at some point, everybody says, oh, man, I just can't borrow anymore. That's when the prices start falling. And because we've had enormous speculation in assets, in property, in gold, in Bitcoin, in stocks, that's when everybody goes, hey, I want 500 grand for my property. And it's like, okay, well, I'll give you 400. And that's when you go, well, no, that's ridiculous because I still owe 450. That's when you get a problem.
Well, if the economy does start to crack, and undoubtedly usually ends up in a recession, it always does in some form. Yeah. Should investors what should investors do in terms of looking at their opportunities versus risk? So their dial should be moving more towards, I'm going to find some opportunities and buy the dip, or should we be thinking this time's quote different?
Isn't it like Steve's principle is to make money, don't lose money?
Yes.
Yeah.
So,
Steve Buffett.
It's a very good question, because lots of people have been sort of saying, well, what do we do when the Cape's at 40 and gold's at 4,000 and Bitcoin's at 120 and, stocks are busting out? So the thing you've got to do is there's a couple of things you can do. First of all, you've really got to get your time frame lined up. And what I'm saying there is a lot of people, it's the old joke, right? You invest in something because you think you're going to make a bucket load in 12 months. Then when it halves in price, you go, I'm a long-term investor, right? In other words, oh, shit, now I've got to hold this thing because, I'm 50% down. So the thing you've got to do is get that right and match your strategy to the time frame, right? Which is what we do in well 1, 2, and 3.
Yeah.
Right? Same principles, but different time frame. Therefore, we can say, all right, in well 3, you should do this because we're going to compound your money over 30 years. Mm-hmm. This is well 2. Look, we're going to compound your money over a shorter period of time, right? And here's well 1, and we're going to compound it over a shorter period of time still, right? So once you get that set, that's part of the way of saying, okay, so for example, I can't remember who it was, someone asked me today, and I said, well, look, if you look at the energy sector, the CAPE ratio is 40, right? And it's really, expensive and crazy. However, the energy sector is really depressed, right? And that's why I think it was a couple of weeks ago we talked about Woodside, right? Because what I'm doing is saying, look, I know the CAPE's really crazy, but Woodside is still cheap or, is cheap. Therefore, if I'm prepared to say, okay, well, I've got, 10,000, for example, right? It's like, okay, well, don't put all of it in Woodside, but put 5 in. And if it falls, you go, okay, well, I'll buy some more.
Yep.
Right? So the thing is looking and again, there's 2 ways to make money. One way is you can say, I'm going to pick the right stocks. I'm going to pick Woodside and Nvidia and Facebook and Google and all that sort of stuff, right? That's one way to make money. The other way is to say, look, I'm going to buy an ETF, an Australian Vanguard shares, right?
The
VAS.
The sector.
right?
Yeah.
And say, I'm going to make money out of asset allocation and rebalancing and market cycles, right? And the other principles we talk about.
Yep.
Now, there's that means there's two different approaches, right? Because one is saying, if I'm going to pick the companies, I need to really know about what they're doing, et cetera, et cetera. If you say, no, I'm going to pick an ETF because, first of all, I know it's not going to go bankrupt. So therefore, I can use asset allocation and rebalancing as my guide, right? Rather than saying, oh, well, I'll pick Woodside. What's it worth, right? So it's a subtle difference. But what I'm trying to get across to people is professional investors, and, well, let me put it differently. Professional gamblers all have systems, right? And what you'll notice is that across blackjack or poker or roulette or different types of gambling, horse racing, right? They're not about picking the winner. They're about saying, where's the mispricing, right? That horse is at 10-1, but it really should be at 3-1. Okay, well, I can put money on it at 10-1. So that's a little bit like what I'm talking about with Woodside.
Well, it's probabilities, right? If you know that your edge wins 65% of the time, then you're happy to take a dive for 35% of the time.
Yeah.
Because over time, it's going to win.
Yeah, I explain it like this. Let's say we're playing blackjack, right? And you say to me, Steve, I'm going to play blackjack against the house, okay? So what we do is we say, all right, look, every time you get an ace, you should bet more money, right? Because what we've done is we've looked at the last 100,000 games of the 100,000 hands of blackjack, and when you get an ace, that person wins 80% of the time.
Yeah.
Right? Okay. So what you do is automatically say, okay, well, if I get an ace, I should bet more money because I've got a higher probability of winning. It's now not a coin toss, right?
Yeah.
At 50-50, and the dealer deals themselves a shitty 6. So what you do is you say, well, hang on, I've got an ace. The dealer's got a 6. Now, if they give themselves a king, they've got to sit on 16. If I get a jack, I got blackjack,
Bingo.
right? Or if I get anything more than a 7, I'm beating the dealer, right? So, and what you're saying is right. It's basically just probabilities. What's my chances of winning? Really good. Okay, well, I should bet more money. And that's how we talk about the Kelly criterion.
Exactly.
Right? So it's about looking at the things. The reason, again, sorry, I mentioned Woodside is saying, when we go through our checklist, what we're doing is say, will it go broke? Probably not. Is the world going to need oil? Yes, they will. Okay. And is it really cheap? Yes, it is. Has it got its debt covered? Yes, it has. Okay. Are there good people running it? Yeah, they seem all right. Okay. And that's where you start to go, okay, this is looking pretty good.
Yeah.
Right?
It's what we've had. What's Woodside done this week? 5 or 6%.
Yeah, it went up. It went up about 5%, I think, or maybe a bit more.
I was looking.
I must admit, I fluked it. I rebalanced on Monday, I think, and bought some more.
I was looking
and then
again.
it shot up on
Steve's done
Tuesday.
it again.
But,
we talked about it 2 weeks ago.
No. Now I got to be honest here too, because last week we said Australian Strategic Minerals, right? It went from 50 cents to $2. Now it's back down to $1.08, right? So I've got to take the punches and the good bits as well.
It's still,
That's transparency.
Well,
We
it's
appreciate
look,
it.
I can't just sit here and talk about winners because that's bullshit, right?
Yeah.
No.
Now
the
I'm still
losers
doing
are fun.
well.
Yeah.
I'm still doing well, but you got to remember too, there were people who would have went, not from us, but there were people who would have said, oh, well, I'll buy it now at $2.
Yeah.
Right? And they're going, well, I'm sitting on a 50% minus.
10%, 10.4% this week, Woodside.
Oh, was it that much, was it?
Yeah.
Oh, that's good. So anyway,
Very
my
nice.
point being, when markets are expensive, generally there's somewhere cheap. But it's no good, I don't want to say to people, oh, you should buy Woodside because it's going to double in 3 months. It's like, no. It's a good long-term hold, and I'm talking 5 to 10 years.
Yeah.
Right.
And if the market does tumble, that's going to get cheaper.
Yes.
Inevitably.
And, and you should be saying, hey, if I liked it at 25, I really love it at 19.
Yeah.
Right? And that's really what you ought to be doing. But what you find is a lot of people say, I bought it at 25 and I don't like it at 19. It's like, why? Just because it's gone down.
It scares them off. Yeah.
I know. So that's where you have to be saying, okay, what happens if I'm wrong when you buy it at 25? Okay, what would I do if it went to 20? Oh, I'd buy some more. Why? Well, I've got some cash here and I'll just rebalance and I don't need the money tomorrow and I still believe it's a long-term buy and hold. And it's like, okay, well, if you go into it with that frame of mind, you're going to be a lot better than an investor who goes in and goes, oh, this sucker's going to double in 6 months. It's like, no, it's not.
100%.
So
that was the biggest thing for me, understanding the asset allocation. Like, if I've got some money put aside for a stock, understanding how much to hold in cash, how much to put in the stock.
Yeah.
Because then you're fine if it drops.
Yep. Yep.
You're not looking under the couch for more money.
Absolutely.
If it drops.
Yeah. It's that's why I say, and we also teach the stuff on systematic investing. If you have a system and you know it works overall, then what you do is you're able to say, when someone rolls in and goes, hey, Tom, junior specky miner, it's like, no, it's not in my system, therefore I don't do it.
You're able to find the signal in the noise.
There you go. Boom, boom.
And on that note, who supplied the wine this week?
Yes, shout out to, it's from WA. The wine is obviously from somewhere else, but that was a gift to us from gentleman. I don't know whether I should say his name. In WA, well done.
I just said his name.
Oh, did you?
Yeah, you're in your bad here.
It's on there.
Sorry.
Thank you.
Thank you, sir.
Cheers, Armand. Great stuff. Absolutely fantastic. Last week was Mirrors, and I hope it's Mirrors next week too, Buster.
I'll bring some.
Yeah.
Steve said he's bringing us a bin 707 for us next week.
Well, it's been in the car all day. So
What is?
Well, it would have been in the car all day. So if you wanted
the Mirrors?
hot Mirrors,
You said you didn't bloody bring it.
no, it would have been if I brought it. That's why I left it.
Well, we could put it in the fridge here.
Steve's a boot wine guy. He keeps all
That's
his
true.
wine in his boot. That's
Well, I
why
have to because you bastards never bring
just
any.
to warm it up,
Luke's gonna lose
just
it.
to heat it up.
You'll be off in Tassie playing golf, and I'll be sitting here bloody drinking wine by myself doing a podcast.
Drinking boot wine.
He's not jealous. All right, short stories. America and Argentina. So America's buying all Argentina's pesos.
Yeah,
by
yeah.
the looks of it.
The important part there is simply this is a broad theme. People need to reduce their sensibilities about economics, right? Now, the reason why I'm saying that is because it's not about economics anymore. It's about national security. When that happens, the government doesn't go, oh, gee, we haven't got enough money, right? The government goes, we've got the money. We've always got the money.
Turn the printers on.
Well, Albo went and got an agreement with Trump, right? And we're going to spend money and they're going to spend money and we're going to invest in them. And now the Americans have said, we want to build a base in Australia, right? A military base, right? Well, the point, no one should be saying, oh, geez, have we got the money for that? Right? Because it's not about economics anymore. And this is what a lot of people are struggling with. The Argentinian deal is bailing out Argentine, but the problem is that Argentina's got lots of stuff that the US wants, and I'm not going to bore you with it, but there's a thing called the Monroe Doctrine, right? And essentially what it said is America said, right, where can we be attacked from? Canada, right. We get the bloody Canadians on side. Okay, and where else from the south? Mexico, right. Okay, we get the Mexicans on side. So that's one sort of big unit, right? Then you look at it further and say, okay, what's over that? What's next? South America. Oh, okay, well, we got to get down there and secure the bloody Venezuelans and the Chileans and the Brazilians and everything else, right? And that's what they're doing. That's why Trump's also getting into Venezuela, right? One, the Venezuelans have got the highest oil reserves in the world, right? So it's an absolute gold mine in terms of energy. For a start, but there's mad as cut snakes down there, right? Maduro got voted out and he went, yeah, I'm not leaving. Right, so Trump said, okay, fair enough, we'll send down the boats and we'll start killing people. And it's like, now Maduro's going, hey, peace, come on, we should all be peaceful.
I thought the whole Argentina thing was that there's just repeated debt crises down there. So America's gone in and gone, well, basically, we'll run the joint now.
Yeah, essentially, yeah. Argentina defaults like once a decade. It's a bloody joke, right? It's a joke. And Miller, the current leader, he's really offbeat and a libertarian. So Trump likes that sort of stuff. But that point aside, and again, what I'm saying to people is, look, I think Donald Trump's an idiot, but that you've got to put that aside and say, okay, that's fine, Steve, but what does America need to do? And what they're doing is exactly what Trump is doing.
Yeah.
Right. So in other words, it's not about Trump. It's about whoever would have been elected in 2016 would have had to have done the same thing, which was pulled up and said, right, we've got to deal with the Chinese, right, and the Russians, right,
and Trump's just doing it in a way that's in your face.
Well, yeah, but it's also too, Jacob, that America's in really rough shape. I'm not saying it's in bad shape, but what I'm saying is, and I think I said it a few months ago, people don't realise how badly America's been hollowed out. Right, their manufacturing industry, they're being flooded with fentanyl, right, which is coming out of China, right, through America and Canada. Everybody's been taking the piss out of America, right, and that's why the Americans have said, okay, we've had enough. But what's happening is all the people who have been sitting back making money out of America have gone, oh, this is terrible. It's like, well, the game's up. Right.
What are we thinking about? So, okay, I'll put it this way. One of the number one questions or comments we get across socials are about currencies and debasement of currencies.
Oh, yeah.
Which is an interesting topic, and people want to know more about it or at least understand it, right?
Yeah.
The US dollar is the global currency.
Yep.
And it's taken a dive this year.
Yep.
Compared to like the past 10 years or so.
Yeah.
What's our stance on that? What's your stance on that?
Well, the dollar is, it is quite complex, but Americans like a strong dollar, right? However, the dollar also runs the global trading system, right? So things like oil are traded in US dollars.
Yeah.
Right? So if you buy oil, guess what? You need dollars.
Yeah.
Right? If you can't get dollars, you're in a world of pain, right? So
that's not changing anytime soon.
Well, no.
We're not going to wake up next week and we're trading in yen.
Or the yuan.
Isn't it going to be bricks?
Well, no. But the problem,
or digital gold.
See, a lot of these countries, like, China, they want to trade in yuan, right? Because that gives them authority and influence. But the problem is, if they have an expensive yuan, their exports become expensive. Well, their system runs on exports. So they
want to soften their own currency.
Well, they're schizophrenic about it, right? Because what they're doing is saying, look, we want to control the trade flows, but we want a cheap yuan so we can export. And the other countries are saying, well, okay, but if you want us to trade in yuan, that's worse for us. So we don't want to do that. But the Chinese want to have it both ways, right? And the Americans are a little bit like that too. They're saying we want a strong currency, but we don't want to run a trade deficit. And it's like, well, okay, but if you've got a really strong currency, you can buy our stuff really cheaply, which means you'll have a trade deficit. And they're going, well, yeah, no, we don't want the trade deficit, but we want the really cheap stuff, and we want a strong dollar, and we want everyone to use it so we can control the global trading system.
Well, the deficit looks bad in the polls, that's why.
Well, yeah, generally, the problem is that we've got to the point now where China controls a lot of stuff, partly because they manipulate their currency. Right, so the yuan is basically tied to the dollar, which means, see, in normal arrangements, if I import a car from China, the yuan should rise, right? But what China, Japan do with the yen, and Europe has done with the euro, has been suppressing their currency so they can export to America.
How do they do that?
How do they do it?
Yeah, how does
well,
that
they just
work?
go into currency markets. right, and buy and sell dollars and keep the levels of
So
it
what
down.
are they trying to sell it at a loss to bring the price down?
Well, let me give you an example.
Yeah,
Germany's overseas investments. Now, this is a little while ago. I haven't seen it updated, but I think it was in a decade, Germany's overseas investments have actually lost something like $6 billion, right? Now, the Germans didn't care because that's not what they're doing. What they're doing is saying, we want to get rid of our money so our currency is cheap against the US dollar, right? Because if
Is that because they got a wheelbarrow full of US dollars that they want to?
Well,
back in,
they've got to
print the local money by the US dollar.
Well, if
what's
I
the point in doing
I
that
export
if
to
it's
if I export
cheaper?
to America, right? I export to America, and the Americans say, "All right, we've got 100 of your cars. Thanks very much. Here's a bunch of American dollars." Right? Now, what really should happen is you say, "Okay, well, I'm going to change these American dollars into Chinese yuan, and I'm going to pay the local workers."
Back to their local currency.
Yes.
Yeah.
But what they're doing is saying, instead of doing that, they're suppressing the wages and they're buying US assets with the American dollars.
Okay, so they're
right?
keeping their US dollars over here.
In America.
Yeah,
So what
that
they're
makes
doing
sense.
is saying, well, we can't buy up all their real estate. So what we'll do is we'll buy the American government bonds, right? So they're flooding the world with dollars. And what's happening is that's creating bubbles.
We'll buy some houses in Australia.
Yeah. Well, yeah, and that's,
Or
that's why
Canada or New Zealand or wherever else, they just let us buy them.
that's exactly the
Well,
problem.
I think you said it. You said it a bunch of times over the last couple of years, but you've said China's usually bought massive amounts of dollars in order to keep the yuan cheaper, helping Chinese exports stay a little bit more competitive.
Yeah. See, because if the yuan rises, what you do is you, in America, say, oh, that, that BYD is not 30 grand, now it's 40 grand. Oh, well, I'm not buying one.
Yeah.
So China's now got to go, oh, okay, well, geez, we're not selling as many BYDs because the currency's risen,
Yeah.
right? So what they do is they artificially suppress their currency.
Yeah.
Yeah.
Well, you do. Well, the
By
other
not
way,
tipping the US dollars back in.
Yeah.
the other way would be to keep your interest rates lower. So the
Yes, that's
overseas
another thing they
investors
do.
Aren't interested in investing because they get lower return.
That's exactly right.
Anyway.
You try and invest in China or Japan and those places, mate, I can tell you, it's not easy, right? And the reason why is simple. They don't want your investment.
Yeah, because
Right.
it's export that they're interested in.
Absolutely.
All right,
Absolutely.
we've barely got past the first page, but did you want to talk a bit about rare earths? Because you've put a document in there for the paid subscribers.
Yeah.
But let's touch on that
Okay.
a little bit.
Look, there's it's all over the news. There's just a couple of things to note. You're going to get everyone saying they're a rare earth expert soon. You're going to get a lot of people. I read an article in The Guardian today, which was like, oh, Albo's going to make a mistake and he's spending lots of taxpayers' dollars. The Guardian are a bunch of lefties and they hate Trump, right? So they're just going to write anything that, they just can't stomach the idea that it might be good for Australia. And it's not taxpayers' dollars. We'll talk about that later because everyone bangs on about, oh, they're spending my money. It's like, it's not your money, bro. Don't worry about it. But anyway, that point aside, yes, I've put a rare earth report in there, Jacob, because I've been following this issue now for nearly 20 years. This report is from 2011. So what I'm saying is we knew what was going on 15 years ago, right? And I've read, I've got probably 7 reports. The EU wrote a report. The American military wrote a report. All these people were writing reports going, guys, this is like really bad. You need to do something. Crickets, right? And now it's got to the point where now it's leverage for China to say, we got all the rare earths.
Yeah.
Right? So it's not as if it sprung up on the West innocently where we've gone, holy dooly, that's so unfair. It's like, guys, we've been talking about this for 15 years. Right? Now, partly China is in it too because they've been keeping the prices low to keep their monopoly.
Yeah.
And that's fair enough. But that's the major issue. it's going to be a really rough 5 to 10 years, right? Because these things they go into everything.
Well, Australia's basically become the West's hub for rare earths and critical minerals. Do we think that what's the word when you clean them? You were talking about it last week. The rare earths go and get refined.
Yeah, processed. Yeah.
Will that now be in America? We're going to build some plants over there?
Yeah, the strategy now will be there'll be a base, right? And the base will, as I mentioned before, is probably saying, all right, we're going to America will develop their own rare earth mines. Okay, now we want you Australians to develop your rare earth mines,
yes.
Right? And we want the Canadians to do it as well, right? Now the reason why they're doing that is so you've got, you haven't got one sole source, right? I.e., you imagine if the Yanks said to us, listen, we want Australia to have all the rare earths, then we've got the leverage going, now we got it. So the Americans are quite wisely saying, righto, well, let's
we'll do this bit, you do this bit.
Listen, we'll fund it, right? You just keep, and like
that's something I want to talk about. They'll fund it, but Australians are investing all their super fund over in America. So really we're funding it.
Yeah, no, yes and no. I think, again, this is where people have got to get used to the idea that it's no longer really about economics and stuff. We will do really well out of rare earths, right? And I mean that in two ways. As an industry, we're going to develop it, right? Because it's, they call them critical minerals. They call them technology minerals, right? So these things are really important. And you're going to see a lot more of it, right? And that's why, Trump was talking to Greenland about critical minerals. He was talking to Ukraine about critical minerals, right? Because the Americans have now woken up and gone, we need to get on with this, right?
Yeah.
So that's why, Linus is really important in Malaysia. And you're going to see a lot more of it, right? Because as I said before, this is not about, I haven't got the latest iPhone. This is about saying we need Tomahawk missiles and they need 100 kilos of rare earths in each missile. Right, where are we getting them from? Right, and that's what's going on. Right, so from that point of view, this will be government controlled, right? Because they'll get that, and as I said last week, if the private sector says, we need a 40-kilometre road, the government will be going, no worries, you just do the mine, we'll get the road, right? Because it's not a market issue anymore, Jacob. Right, it's a national security issue, right? So it's not a thing where you go, oh, that's really expensive. Governments don't do that. Governments go, what do you need? X, righto, we'll get you X.
Yeah, doesn't matter what it costs.
Exactly, because it's not about cost, Tom.
No,
it's not about cost because it's not about a market.
Yeah,
right.
I'm just thinking if it's government controlled, will we have government controlled prices on stocks? Like, will we see stocks go nuts, or will it just be a steady incline?
Yeah, that's a good point. I'm talking to someone.
The next bubble will be critical mineral bubble.
You've got to be careful because it may well happen that way. I suspect what you get with government control is you get a lot more. The Japanese have what they call administrative guidance, right? And what administrative guidance is bureaucrats saying, we think it'd be a really good idea if you did X. Right? What they're saying is you do X, right? That's what's happening. The West is becoming more like China than China is becoming like America, right? And the reason why is because that's what we have to do to compete with them now. So the government has to say, you've got a rare earth mine, we want the minerals. Then it becomes a matter of bargaining between the owner of the mine and the government, right? Yeah. But the government will sort of say, it'd be really good if you accepted X. Right?
Or I'll find a reason why you're breaking rules and I'll take it from you.
Yes, right? Yeah. Or they say,
drone strike.
They go to BHP and they say to BHP, we'd really look on it favourably if you offered, $1 a share for that company worth 60 cents. Mm-hmm. Because they're being belligerent and we think that you should develop that site.
Yeah.
we'd rush through a lot of approvals and give you a floor price.
Next minute
bingo, right? And it's a lot easier to deal with one BHP than it is with 45 little rare earth miners, right? So I think you'll get a lot of M&A, right, merger and acquisitions in the rare earth space. It's like oil takeovers.
Can you, when we take this offline, can you tell us where to put our money in the next 60 days, please?
Let's talk about the lesson of the week before we wrap it up. The S&P's in here, and we talk about this week after week, but this is basically showing from left to right that the S&P's always gone north. And I guess what we're trying to say is there are points in time, and this is something I've seen on the socials the last few weeks and for the last few months, actually, people just saying, just put your money in, you'll be right. Doesn't matter when you invest, you'll make 8% a year.
Equity, mates.
Oh, the lads.
The lads.
So let's explain why that doesn't happen.
Right. Because the reason why I put that chart in there, and it's really important, everyone talks about the squiggly line, right? The daily change in the prices of the ASX.
Yeah.
Okay. So at the moment, let me give you an example. Right. At the moment, the CAPE ratio is 40. Okay. Now, the US market has had a secular bull market since 2009 when the CAPE was about 12.
Yep.
Okay. Now, when the CAPE was 12, 100 divided by 12 is roughly about 8, right? Now, the US has gone up at about, on this chart here, about 11.5. I think it's actually about 13.
Yeah, it's a bit more now.
Right?
Yeah.
About 13. Okay. So from CAPE in 2009 was saying, look, you'll probably get about, 9 or 10, right? Okay. You've got about 13 or 14, right? So you've had a good run. Okay. But now the CAPE is at 40.
You might get 2.5.
You'll be lucky to get 2.5, right? However, people are looking at the squiggly line going, yeah, but it's gone up for like 16 years, right?
116 years.
Yeah. So the point being, you've got to look at the earnings yield because that's the one that really tells you what you're going to earn.
Yeah.
Right? So at the moment, the earnings yield in the US is about 3.2. So what we're saying is if you invest your money now, you'll get roughly 3. Minus inflation, blah, 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 you'll get ZOT, right? Now, if you looked at that in other times when the CAPE was low, you find that the earnings yield is really high. So in 1982, it was something insane like 16, right? Well, you ended up getting 18. But my point being, don't pay attention to the squiggly line. And the reason why is because people freak out when the market, quote, drops, 200 points or something, right? So what you want to do is say, the earnings yield's gone from 3.2 to 3.21, right? Well, you go, okay, well, that's nothing. It's like, there you go, right? If you're a long-term investor, right, it's really, really important. And the reason why is because people get trapped at the top like now, going, yeah, but it's gone up for 16 years and, it's really great. And they can't see that the earnings yield is 3 and you can get 4 in bonds with 0 risk, right? So the argument should be, well, no, stocks should be getting 7 if I can get 4 in bonds. I want 3% for giving my money over to these companies.
Well, you've got a cohort of people like in the between 25 and 30 that have only ever known the stock market go up.
Yeah, number go up, as they say.
And plus, frankly, it's been volatile for ages.
Yeah, the volatility's been low, but it clusters like COVID, 2022 and stuff.
Yeah.
But look, as I say, you've got to look at the earnings yield because unless you say, I'm going to rebalance. And again, the slide we show at the end of our earnings yield session is saying, if you don't rebalance, you do not get that capital gain part. You get the dividend of 3, but if the market goes from $1 up to $1.80 and back to $1, you didn't get the 5% that it went up in the capital gain because you didn't take it off the table.
Yeah, just been a wild ride.
Yep, exactly.
Yeah.
And a ride
And
that
you'll be
ends in
sad.
disappointment.
You'll be sad.
No, exactly. It ends in disappointment because you go, oh man, I should have sold when it was $2, and it's like that's
Well,
right.
especially when you get a market top as well, and it goes from $2 to $5 to $1,
Yes,
and totally blows off.
Yeah.
yes.
Anyway, anything else you want to wrap up the day with, Tom?
Shout outs.
I don't think so. I think look after Steve. Subscribe to the blog, please.
What about Dan?
No,
Dan-
we shouted
Dan-
Dan out 2 weeks ago.
Oh well, I'd give him another one just for free.
Dan Harvey, you're like
Two for
You are a good mate.
2 for 1 deal. 2 for 1 deal.
All right.
And
Thanks.
somebody, for God's sake, somebody send us some wine.
Yeah.
We're low on stocks.
And if you want us to review a stock,
Send us some
through.
wine. Oh, I see. Yeah, no, I got you, Tom. Yeah, okay. Oh, yeah, send us some.
Wine Weasel.
Catch you later.
Cheers, folks.
This podcast does not provide financial advice.